I just bought above this bull bar. Um, my premise here is that we had a tight channel down, tried to form a double bottom bull flag, but instead failed. These three bear bars are the biggest three bear bars, and they're coming 15 bars into a tight channel, um, into a tight bear channel. So I thought that's a potential climax. We got a pause here, and a small second leg down and reversed up and formed a micro double bottom and a bull signal bar closing on its high. So I bought above that, betting that we've already had the second leg down from this climax and looking for a minor reversal up. It's possible that this just forms a double top here, and we need a more credible second leg from this climax. But because it was a second failure at the low of the day, I thought it was reasonable to take it and use a wide stop and buy more, betting that we get back above this buy signal. So if we do need a more credible second leg from this impulse and we fall for 2 or 3 more bars, I'll buy more above a second reversal, a second buy signal. My stop is a measured move down from this high to this low, betting that this is not a measuring gap. Right now I have an order to get out 3 shares at 50 cents, and then the other 2 shares I'll exit maybe if we close this gap, or at the high of the sell climax, or at the moving average, which is somewhere right here right now. So maybe 50 cents higher as well. So 50 cents, I'll exit 3 shares at 50 cents, and then my other 2 maybe 50 cents higher to see if we accelerate up and test some of these levels. So this is July 24th of this year. It's a similar concept. Big gap down, rally to the moving average, 2 legs up, and then we have a clear support level here. We fail and get an acceleration down, but late in the bear trend. And so here we failed once at the low of the day. We got a good bull signal, and that was the low for the rest of the day. So that's a possibility. Today we have a lot less buying pressure. Here we have a lot of bull bars on our way down. Today we don't have that. So that's why I thought it was not necessary, but it was more likely that it could pull back more deeply. So I thought it was higher probability for me to use a wider stop in a situation like today. Even in that example I showed, I think it's probably better to use a wide stop because we could get a second leg down. But here we didn't need one. This is March 9th of this year. Same situation, big gap down, 2 legs up. This is very similar actually because we had a spiking channel here and we also had a spiking channel today. And we kind of drift down to support where you expect a higher low double bottom, and instead we just collapse here. Today, on March, this is March 5th actually. On March 5th we collapsed down below the low of the day, but 2 big bear bars late in a tight bear channel. And here we had a good buy signal, but instead we needed to channel down a little bit more and get a second entry. And we eventually got back up to that buy signal. So that might be what happens today. So I think either we get up to my targets right away, or we might need to pull back first and get a second leg down from this climax and then rally back up to that buy signal. But I don't think it's a measuring gap. So I don't think we will exceed a measured move of this tight channel, but we might, and then I'll get stopped out. But my premise is that it's not a measuring gap, and that because of the micro double bottom and the bull signal, that we should get higher, either now or soon. We got a good bull bar there. Didn't quite reach my target, but at this point we have 2 legs up. So if we now get a bear inside bar closing on its low, or just any bear signal bar, I'll exit below it because I think that's the minimum criteria after a climax to get 2 legs up, and now we have that. So if we get a sell signal, I'll exit. I just reached my target for my first 3 shares. My last 2 will just be discretionary, so I'll see how it acts at the moving average, which is at 334.67, and exit based on that. I'm also going to move my stop to break even. I just ended up getting out of my other 2 shares there. I wanted to see another bull bar, or I wanted to see some acceleration up towards these lows or towards the sell Climax high, but instead we just started to hesitate here and go sideways. So I thought it's best to just exit and then see if I can find another buy if we form a double bottom here, or something a little bit lower. So I ended up making $2.63. A small, I mean, it's still a good trade, but small trade because I traded small and used a wide stop. And sometimes I look at it and think it's not worth it to take it, but at some point it will be worth it. And I mean, considering how far I've come, I mean, I'm happy with $2 or $2.50. Just knowing that eventually it will be worth it to take these trades with small size, and the profit for it will still be meaningful. When I was risking 10 cents and 20 cents and 50 cents, if I took this trade with a wide stop and small size, I would make like 7 cents on it or 10 cents on it, and that doesn't seem worth it. But at some point, it does become meaningful to take it. So I thought today it was meaningful to take it for a lesson, to get experience doing it and making the reads of when to exit and when to and where the stop should be, and just of being in the trade, but also because I think $2.60 is still pretty good.